Hey guys, it's your girl Paula, the Queen from Queens. These are money minutes that matter. It's a talk show where you call me with financial questions and I'll give you financial answers. We become accountability buddies. We'll walk hand in hand to eliminate debt, help you maximize your financial future, and to optimize your health. These segments are being called the cost of living. What does that mean? I have a host of resources available to me, and I'm going to bring some of my resources to you. So today, I'm bringing on an insurance expert. His name is Gary Phelps. We've been friends for more than 15 years. Our boys did elementary, middle, and high school together. Now they're done with college and they're living their lives, and they're fine young men of God. We need to ensure that our families are safe when we're no longer here. Mr. Phelps is an insurance expert. I'd like to welcome him to my show. Hey, Gary, how are you?
Good evening, Paula. How are you?
I'm well. Thank you for being a part of the show today. I really appreciate you.
And thank you for having me. I look forward to spending the evening with you.
Well, we talked about this, I think back in November 2019, because the thing that kept prompting me was I see so many of these GoFundMe pages. People are not preparing for their future, they're not preparing for their families. And ultimately, when you leave insurance for your family, it says, I love you. I have a plan for you when I'm not here.
Mm-hmm.
Average cost of a cremation is $2,000. Average cost of a funeral is about $10,000. Just recently, my good friend in New York, her uncle died of COVID. The family started calling around to other family members just to gather money so that they can bury this person. It hits and it impacts everyone. And then ultimately, once you finally make these final arrangements, you still have to live after. So let's talk about life insurance.
Sure, Paula. As an insurance broker, one of the things that we really focus on is trying to help people plan for that untimely death that could happen in their family. But one of the things that really gets kicked down the road, or the candy gets kicked down the road the most, is the need or the decision to buy life insurance, because there's so many other things going on in people's lives that require money. You have to pay your mortgage, you have to pay your car payment, and your auto insurance and home, and all those other things. So it keeps getting postponed. But we have to try to make it as affordable as we possibly can for people. And I know that we're going to get into the conversation where we're going to talk about different types of insurance, whether people should buy term insurance, or if they should buy whole life, or what's the right answer to that question. Well, in my opinion, the right answer to that question, the insurance that you have in place when you die is the best insurance to have. So whether it's term insurance or whether it's whole life insurance, it really doesn't matter when someone is now passed away and that money's left to take care of their final expenses or take care of their family, because they're not there anymore. Obviously term insurance is less expensive, but it does end. It's designed to protect someone for a specific amount of time, for example, 20 years or 30 years or whatever. But once that period is over, it goes away. It's not there anymore.
Mm-hmm.
The whole life product is more expensive, but it never runs out. And a lot of people say, well, okay, Gary, which one should I buy? Well, it really depends on the situation. It depends on that person's financial situation. Just to give you an example, if you are funding your retirement plans, your 401k, your IRA accounts, and you're overfunding them, you're funding them to the max, okay? And you still have extra money. You still have more cash or more money at your disposal. Buying whole life insurance is not a bad idea, because you're able to accumulate cash on a tax-deferred basis. So it could be a good thing. I am personally a believer of buying term insurance because I believe that I can take that money and I can buy a mutual fund. I can do other things with that money, and I can get a better performance. The problem with that is not everyone can handle that. Not everyone can actually handle that function. And if you can't handle it, the whole life product is not a bad product for you to purchase.
You see, being a financial coach, my whole goal is to help people to empower them, take control of their money, their finances, and their future, right? So yes, I agree. I always push term insurance because whole life is probably 80 times, well,
Absolutely.
80 times more than term insurance. So case in point, we've all heard the commercial. Oh, Billy Bob, we just gave him a $250,000 life insurance policy for 10 years, only $50 a month. And he has high blood pressure and high cholesterol.
Mm-hmm.
But what people are not hearing is that Billy Bob is currently 40. But in 10 years, Billy Bob is going to be 50, which means it'll be a lot more expensive for Billy Bob to get additional insurance.
Right.
And because he has high blood pressure and high cholesterol, and as a nurse anesthetist, I can tell you, he may have more comorbidities, heart disease, lung disease. He may have had a heart attack or a stroke in that 10-year time frame, and he becomes harder to insure.
Mm-hmm.
So I know, and people need to understand the term. When Hugh and I purchased insurance, I was 39, Hugh was 40.
Mm-hmm.
Well, his policy is 3 times the monthly premium than mine, because 40, I believe, is the magic number. Am I correct?
It is, yeah, absolutely.
So I pushed, as a financial advisor, I push people to take onus. So if you can get a policy for $50 a month, instead of spending $150, take that other $100 and invest it in yourself.
Absolutely.
So 30 years, if you're 40 years old, you purchase a 30-year term policy, which is what we did. At 70 years old, our life should be different. Absolutely. I shouldn't have kids in college. I shouldn't have a need to pay my mortgage or to have car debt. I should have all that money amassed, like you said, in a 401k, IRA, some kind of mutual fund, some kind of tool that's making me money so that when the term is up, I can become my own insurer.
Absolutely. You just mentioned a very key point in that you buy a 30-year term policy and you have a 30-year mortgage. Let's just say your mortgage is $500,000 mortgage that you have. Over the next 30 years, you would have paid off your mortgage. Okay, if you stay the course and you make your monthly payments, your mortgage will be paid off, and you will own your house. The house will be yours. Okay, so now your family, your husband or your children, they have your house as an asset. Okay, no mortgage, place to live, no payment. So the need for you to have that life insurance now after 30 years actually goes away. Now, yes, you do have to bury yourself, or someone will have to bury you, but you still have that big asset there in that home that you live in. So it's, I think we both agree that term insurance is a great product and it's an inexpensive way for you to provide life insurance for your family. But the bottom line is people still postpone that, they put it off. Life insurance is one of the products that you actually have to sell as a broker. You have to create a need with the client, and they have to feel like they do need it, because what happens is sometimes they'll buy it, but they'll let it lapse because they'll think that they don't need it anymore. But it's very important, especially in our community. Okay, a lot of people over years have created generational wealth through life insurance. Yes. Because let's just say that I was wise enough to purchase a $500,000 term policy. God forbid something happens to me. My wife has a great job. She works. She's making a decent income. But now she has the $500,000 in life insurance that was on my life, and I'm now passed away. So now she has a nest egg. I'm not saying that we couldn't create that nest egg another way, but that life insurance product really helps out. So we're kind of late to the party for lack of a better term, but we're getting there because there are people like me that are in the industry that help educate people about the need for this. You know,
that's why we're here today, because you're educating all of us. So let's talk about some of the costs. In terms of I come to you, certain age, certain health disorders, all those are factors in how much my premium will be. Am I correct?
Yes. Uh-huh. I mean,
So,
you're under no obligation initially. I mean, when you come to a broker, whether it's me or anyone else, you apply for the life insurance policy, the expense of going through the underwriting process is on the company. They'll come out or they'll send someone out, they'll weigh you, they'll listen to your heartbeat, take a blood sample, urine sample. All that information goes back to the lab. They order your doctor report and they look at all that information. And then they determine your final rating, whether it's select, super select, or standard, non-smoker, or you could get rated a table rating if you've had an issue that maybe is under control now. You can get a table rating. You still can get life insurance, even if you had something that's really bad, like cancer or something. That doesn't mean that you can't get life insurance, because you still might be able to get it. It may cost you a little bit more, but as you go through the underwriting process, they write back and say, okay, yes, we're going to give you the policy. Then you decide whether or not you want it or not. You say, yes, I want it. You pay the premium. The policy is yours. It can't be canceled. Once they've issued the policy, the only thing that really could cancel the policy is your lack of premium payment. If you stop paying the premium, they've underwritten you, they've looked at you, they've checked you out, and they've agreed to accept you. The good thing about the term policy that we were talking about earlier is that if you find out after you've gotten the life insurance policy that something has happened in your life and you've now become ill, and you know that your term policy is expiring in 3, 4, 5 years or 10 years or whatever the time span is, you can convert that term to a permanent plan, even without having to go through any insurability, because you've already qualified for the insurance. So that's a big plus, of actually buying the term policy at the cheaper rate, because you can always convert it to another product later on.
See, I'm learning. I'm here. I'm sitting up under your feet. I'm learning. So it's interesting. I was on vacation last year, and we met some girls who were from Southeast Asia. They were from Jakarta, and they were young girls, beautiful girls, all professionals, and it's cultural. So I think they were about 35. None of them were married. They all lived with their parents. They were women. And the interesting thing too is that American women live longer than the men. But back to my story, we're sitting on this little dinner cruise and we're talking. And because within their culture, it's not looked well upon for women who are unmarried to live alone. All these professional women were still living with their parents. And they all had insurance. And I started this on EAJ 1023 radio. I did an insurance segment probably in November when I called you to get some information from you. But I was saying to them, you have no dependents. Because you have no dependents, you don't have to leave insurance to anyone. It has to cover your expenses. So who needs insurance? Why is it important that women have insurance?
I think that's a great question. I think that everybody needs life insurance. I mean, I'm talking about even people that are younger, that don't maybe they don't have any children right now, okay? But they may be planning to have children, okay? So buying life insurance early in your life is very, very important, because when you're younger, it's much less expensive. And you can buy longer term insurance because you're younger, because your life expectancy is so long. So why wouldn't you want to lock yourself into a cheaper rate early on, knowing that one day you are going to have or get married, and you are going to have children, and you're going to have a mortgage. All those things are part of life. It's going to happen. It's just a matter of when it's going to happen. Now, not everybody's blessed to have children. I get that, okay? Yeah. But most people typically get married. And most people typically don't want someone else to be responsible for taking care of their final expenses. Even if you're single and you're on your own, you don't want your mom and dad have to bury you when you're an adult. So you it's a part of planning. Okay. Yeah. In a lot of ways, I mean, there's a lot of ways for people to come up with the extra money to afford to buy the life insurance, because there's other parts of a financial plan. Obviously, you know that when you sit down and you do your plan with someone, you just don't talk about life insurance. Okay. You talk about their mortgage. You talk about their eating habits. You talk about their their social habits. You talk about their car insurance. You talk about their homeowners insurance. You talk about all these different things. So if I'm able to talk to a client and I'm able to go over their entire insurance portfolio, well, if I'm able to look at someone's car insurance and I'm able to save them $150, and I look at their home insurance and I'm able to save them another $150, I've just come up with $300, right? So that $300 can be now reallocated for a younger person toward their life insurance, right? Because we're still up the same amount of dollars. We're just reallocating it in a different way. So that's all a part of what you're really all about, is to help someone plan for all the things that are affecting their life, whatever it might be. It doesn't have to be, and you could be talking about anything other than insurance. You can talk about any topic. That's your job, right? That's what you're all about, to help people.
It's so interesting you mentioned that, because you may not know this, but my husband and I, we kind of used you guys back in 2010, 2011. We were on our debt-free journey. It was 2010, and we had so much going out. Now, one of our biggest expenses was that we were eating out every Saturday. As a family of 6, we would go to different restaurants. And it would cost us $200 to $300 just to eat out. So times 4, that's $1,000+ every month. But what we decided to do was we started having potlucks at your house, which saved us a ton of money. So instead of spending $250, we would spend $50, bring drinks, bring desserts, bring a dish. We'd have a great meal as opposed to going to a restaurant. So you guys were probably the first family we ever helped to go onto a debt-free journey along with us. So do you remember that?
I remember that. That's one of the best things that ever happened to us as well, Paul. And I thank you guys all the time for that, because when we started having those conversations, it forced Kathy and I to kind of get on the same page. It's not that we were struggling, it's that we were our spending was just kind of out of control. But getting us to sit down and put things on paper and, share our numbers together helped us to kind of clean up our debt, so that we can, I guess we're just happier because we don't have those bills over our head,
And the thing too is that men die, women get sick. In healthcare, you guys have mortality. We go to the doctor all the time. We're getting ourselves checked out. We're taking care of our children. So we don't get sick. We get sick and we tend to live a lot longer. So how important is it for women to have insurance?
It's just as important, because without my wife, I have a whole host of other problems that financially will have an impact on me. She takes care of the house. She takes care of the grandchildren. She is a valuable part of this equation. So if she's not here, then I'm gonna have to pay someone to help me do those things. Okay. So for her to have life, I'm not saying maybe she didn't have to have quite as much as the husband, but there's definitely a need for her to have life insurance.
That's amazing, because you touched upon something. Now, your wife, one of my best friends, love her to death. We've known you guys since the kids were in elementary school. So it's been a 15-year+ journey, and our boys are still best of friends. So she is not a stay-home mom. She's actively working. She's an active contributor to your family. So how much insurance is enough insurance? Do I tell my clients 3 times their salary? I tell them 10 times their salary, but how much is enough?
Well, again, going back to what I said earlier, the best type of life insurance is any life insurance that you have in place if something happens to you, okay? The more, the better. I'm not one that's going to tell you that you should have 5 or 10 times as much. You should buy as much as you can afford, okay? Sure. Because again, what you're trying to do, in my opinion, you're trying to leave a legacy, okay? I do not want my wife to have to get married if something happens to me. Well, I don't want her to have to worry about paying a mortgage. Yes. I want her to be happy, and I want her to be financially secure. And if she meets someone and she gets remarried, hey, that's wonderful. That's great. I don't have a problem with that, because I'm not here anymore. I need to feel comfortable that she's gonna be okay. Yeah.
Okay. So let's talk about some types of insurance. There's a whole host, right? Some important things are home, auto, life, health. And there's a lot of variables. There's disability, there's liability. I get those through my employer. I get
Hmm.
short-term and long-term disability, which costs me less because it's through them. I also get professional liability insurance through my employer. But the need for home insurance. Do you also sell home and life
Yes,
auto?
we sell a whole gambit of products. Our specialty basically is home, automobile, life, business insurance, and umbrellas. Okay, and let me just stop and just talk a little bit about auto insurance. And obviously, we know why we have to have auto insurance. You buy a car, you have a lien on the car. You have to carry insurance on it. You have to make sure that you protect yourself against liability, all those factors. But the way you structure your coverage is also very important. You know, there's no need for you to carry a policy with deductibles with really, really low deductibles, okay? Because the lower your deductible, the more you pay for the insurance. It doesn't really matter what company you're with. The deductible drives the premium. So if
Mm,
I want a low deductible, I'm going to pay more premium. Now, most people don't have an accident every year. You know,
hopefully.
on average, if you do, you have another problem. But on average, people have a bump about every 3 to 5 years. They
Okay.
bump into something. Okay, so if I carry a higher deductible, I'm paying less money for the insurance. So over those 5 years, I'm saving. Okay, I'm accumulating, I'm saving premium dollars. So then when I have an incident, I've saved up enough to pay whatever the deductible is. I'm one of those guys that I think $1,000 deductible for collision is the right deductible.
Hmm.
And I think for comprehensive coverage, which is for vandalism and theft, I'm thinking a 250 at the least. I would really rather have a person to have 500 with a zero deductible for glass. Okay, because that's really what you're going to have your claim on. If a pebble skips off the freeway, hits your windshield, cracks your windshield, that's not a big premium driver. Okay, but the collision it will save a lot of money. And the younger you are, okay, the more you're going to save, because statistically they know that a youthful driver is going to have more incidents than an experienced driver.
Mm,
So to give you an example, let's say you have a family that has 3 cars, and there are three drivers, mom, dad, and a youthful driver. Okay, that youthful operator is the most expensive part of your policy. So that if you're carrying a higher deductible, then that means you're going to pay a smaller amount for that youthful operator. So my point is, raise your deductible up a little bit, save the money, accumulate that cash, and so that when there is a bump, you can pay your deductible and you can move forward. You know, again, that's a way to kind of save a little bit. Same thing with the homeowner policy. If you have a fire in your house, Paula, obviously it's going to be much more than your deductible, because the smoke damage and everything is going to cause a lot of problems. And if your claim is over a certain threshold, your deductible gets waived anyway.
mm.
If it's over a $20,000 claim, the deductible for most companies is waived. So why wouldn't you carry, a $1,500 or a $2,000 deductible on your house?
And that's what I agree with. That's why I wanted to have you here. And I need to put in a disclaimer that I am not paying you to be here. And if anyone chooses to use your company, it's their right. And I encourage everyone to investigate and to do their homework. But you're here as a favor to me, and I appreciate you as being one of my resources. But like you said, I have high deductibles. I have my cars are $1,000 minimum. My home is $2,000.
Mhm.
Because in the event something happens, I need to be in a position where if I'm saving an extra $100 a month, I can put that towards retirement.
Absolutely.
And I currently have 2 kids in college, so all the money's going somewhere.
Look, if I'm your broker and you call me up and you say, hey, Gary, I just had the wind blow some shingles off my roof. Okay. And I've called the guy to give me an estimate, and it's going to be $1,000 to have him replace the shingles on my roof. As your broker, I don't care which deductible you might have. I'm going to tell you, look, you do not want to make that claim. It's just not big enough, because that works to the advantage of the insurance carrier. because now they have you with a claim on your record. It gives them the ability to surcharge you, to charge you a little bit extra for your premium because you've had this little small claim. And this claim stays on your record in Maryland for at least 3 years. So it just doesn't make sense to do that. So why am I going to ask you to carry a deductible that's 500 or 1,000 or whatever, when I'm going to tell you that you shouldn't make a claim if you have something that little?
That's
So it's just
great information.
Yeah, it's just not practical.
Okay, so the one thing I had no idea about is universal insurance, or is it called universal or umbrella? What is umbrella insurance?
I mean, umbrella insurance is just what it sounds like. It is an umbrella over all of your risk. So you drive your car has liability limits on it. Your house has liability limits on it. If there's a bad incident, whether it's in your house or in your car, it doesn't really matter, and you're sued for over the limit that's on your car insurance, that umbrella policy catches that excess. Okay, and you may say, well, gosh, Gary, what could happen if I am a surgeon and I make my living with my hands, and you run a red light and you hit my car and somehow my right hand gets smashed, and now I can no longer do surgery anymore. Now I'm a high earner, so therefore I can make a case that, you prevented me from making a living, so I'm going to sue you and your insurance carrier. So therefore, it's important to have that umbrella policy, and it's not really a very expensive product to carry. Most homeowners can buy an umbrella policy for like a couple $100 a year for $1 million or $2 million, maybe $300. So it's not like it's really, really, really expensive. And the more assets you have, the more important it becomes for you to get that umbrella, because the more you have, the more people can take. A little bit cheaper.
Well, I want to mention something about your company, and I know that you own your own company. You've been in partnership for a number of years, but now you brought your son into it. So now you're creating a new generation of wealth for the Phelps family. Is that correct?
I'm hoping for that. I mean, I don't want to push this business on my son. I'm glad that he decided to come in and work with me. I think it's a wonderful opportunity for him. Most people don't grow up and say, I want to be an insurance broker, Paula. Let's just face it. It's not a glamorous job. It's basic blocking and tackling. But you can make a decent living if you do it the right way and you treat people with dignity and respect, and you really try to help people, because that's really what it's all about. And if I can help you, then typically you'll tell other people that I've helped you, and I'll get more business as a result of it. Our business is a residual business. You make a few pennies off of the renewal of an auto policy, but you have to have lots of them. So the longer period of time you can stay in the business, the better off you will be financially. My son, obviously went to UVA, and he graduated and came out and decided to come in with me. And as a father, I'm very proud of that. But again, this is not something that I want him to want to do for me. I want him to want to do it for himself, that he thinks is a good way to make a living. And we'll see over time. I mean, it's been about 4 years now since he's been in there, and I think he likes it. But again,
just bought a house.
He's doing well. He's doing well.
And see, for me also, I'm trying to get people into the mindset of just do it. Start something new. 9 out of 10 businesses fail. And how long have your business been since inception?
I've been in the insurance business for 36 years. Okay, I worked for an insurance company right out of college, and I worked for that company for 16 years. And then my partner Lewis Hickson and I started Preferred Insurance Solutions in 2000. We started off as a scratch agency. I was my first customer. Okay. And it's grown now to, we have 7 producers in our office. Our office is down in Germantown. And
Awesome.
I couldn't imagine working for someone right now. I mean, I've worked for myself for so long, and in the beginning, it wasn't easy. I remember distinctly, Paula, coming home one afternoon from my job. I had a job I was a sales manager, had a company car, expense account. Things were good. Life was good. And I came home and I told Kathy, I said, honey, I want to quit my job and start my own business. And she just looked at me Like, are you crazy? Are you absolutely crazy? I said, no, I want to start my own insurance agency. My job right now, at that time, my job was to go around and open up offices, insurance offices around a particular city or town, and train the people within the office to go out and solicit and sell insurance. That was my job. Okay. So I said to myself at the time, I'm teaching these guys how to do this, and why don't I just go do it myself? So I'm responsible for me. Okay. Back then, my job was really driven by how much I could get those other guys to sell. And then I said, well, man, I can do this. I'll go sell for myself, and then I can determine, my own success. So anyway, Kathy finally agreed and let me do it, because I had to go. When you start your own business, the first few years, it's not very easy. You're not making very much. So Kathy agreed, and I did it, and things turned out great, and we're just so happy. I'm so happy that she let me do it. I don't know what I would have done if she didn't.
Well, you guys are a great partnership. I mean, you've been married for 35 years. I know your family. I know your beautiful children. You've gotten 2 kids through college. You have a really cute grandson. You're planning for retirement. So I love it. And you guys are young, and you guys are enjoying being empty nesters. So I love it. And I really appreciate your coming on my show today.
I cannot tell you how much I have enjoyed being on your show, and how proud I am of you, of what you're doing. You have helped us, okay, and I've been very clear with that all along. You've been very helpful to our family in helping us get our finances in order, and we definitely really appreciate that. But most importantly, I think what you're doing now by having these segments, I think is very, very important, because I've looked at several of them already, and it's always very meaningful. And I know that when people watch these shows, they can take a little piece of this and a little piece of that and make their situation better. And that's really what this is all about.
One last question.
Mm-hmm.
How does debt freedom feel?
Absolutely great. But I still spend a lot of money though. I mean, as you know, Kathy is going through a little renovation here. That's
But you're paying for it in cash.
Yeah, everything's good though. I didn't have to borrow money, thank God.
There you go. Well, thank you, Gary, for being a part of the show. You have a wonderful night.
Thank you for having me. Take care. God bless.
Bye-bye. Thanks, Gary. This has been an amazing show. I greatly appreciate you for coming on and for sharing your wisdom. Like you said, the best insurance to have is the insurance to have when you're no longer here. And that creates a legacy for our families. It leaves generational wealth. It says to our families, I love you and I have a plan for you. That's what insurance does. There's too much craziness in this world. I work in level 1 trauma. People are dying every day. Let's not impact our family with that negativity. Let's have a plan for them. Remember, faith conquers fear. I love you and have an amazing day.